Welcome back to another video, guys. This video is going to be about a gold trade I took. That's XAUUSD trade. That trade was taking off smart money concepts and the concepts of supply and demand with some help with our Fibonacci tool. Nasdaq, AUD, USD, and gold. So guys, this was the gold trade that we took. I took this live with my students, my pre-mentorship people. I gave them the trade live. So guys, this trade was just about momentum because there was liquidity resting at this stop and price swept the liquidity, giving us fuel to continue downwards. So okay, this was when I was testing for order block and fair value gaps and the rest. So this was the current supply zone. Let me clear the charts and I'll take you guys through the whole run through and the rest. So on the higher time frame, market is consolidating. That's on the 1H time frame. Market is consolidating. You guys can see. So guys, the market is choppy on the 1H time frame. That's 1H. 1 hour time frame, the market is choppy. You can see it's just going up. It will break structure. It will give us a change of corrector. So we had to escape the noise a little bit by going down to the 15 minutes time frame right here, where we saw a clear market structure. In 1 hour time frame here, in the 1 hour time frame, there is a very long wick rejection, rejecting this price range, multiple long wick rejections. And if you learn anything about candlestick, long wick rejections usually refer to price reversal patterns. Price reversal, that means price usually reverse around those zones, those areas. So we go down to the 15 minutes time frame right here. If you can see, liquidity has been swept. Liquidity resting here has been taken. And when we go down to the lower time frame, we can see a clear picture of how things are happening on the lower time frame. So you guys can see there was a big push to the downside here. There's supply here. There's supply around this area. So what we have to do now is that we need to see supply, like we need to see price come back to this major area to get a sell-off. Like if you can see, the thing is currently just retracing. I am expecting a retracement all the way to this stop. Then we can be looking to short gold on like overall, probably in a week, 2 weeks time, or yes, in a week or 2 weeks time. So now we need to look for the one that is closest or closely related to the current charts. Like if you look at this, let's turn on the season break, like session breaker. This is session breaker, Tokyo session, London session, and New York session. And today is Tuesday currently. So what happened on Monday right here? This is Monday zone. This is Tuesday zone. So wait, let me do this. Now we need to find something very closely related to the current chart. I got on this chart somewhere around Tokyo session opening. Around here, Tokyo session, that should be around 3 o'clock my time. Around here. This is where I saw this move. This trade I took was a very, I won't say risky trade, but it's something that I am not supposed to be doing because that was not the appropriate session to trade it. So if you see, there was a impulsive move down, then the price just corrected. Then another impulsive move down, creating equal lows here. And if you see, there is fair value gap here and there's fair value gap here currently. We would have said we should take this one here, like this, from this candle here to here. Take this as your supply zone. It's a supply zone. But this zone has already been mitigated before. Price has touched the zone. Correct. You see, market has touched it here. Has went back and touched it. Let me zoom so you will see what I'm doing. Market has come in and touched it here currently. That means this zone is not valid like that. It's not valid again. So now we need to find a fresh one, which is this one. Another impulsive push to the downside. We'll mark that as a current related level in the market. So this reduce this. Let me reduce this for me. Okay. So now this will be our demand zone. Yeah. Supply zone here. Now we'll mark we'll take our Fibonacci extension from here down to this zone here, this first one here. Wait, let me change settings on the Fibonacci. I need to increase the color so you see what I'm saying. So just need to brighten this a little bit. Okay, so from there to here, or from the major swing where the actual move started, where that is this is the major swing where the actual move started. So from here to from this top here to this swing low here currently. If you know anything about premium discount price, you know that this is the perfect zone to take our entry from. So we would have taken a sell right here. Our stop loss will be just a target tight with this 860, and we'll be looking to target the lows. But if you see, market gave us multiple week rejection, rejecting this particular price around here. So we'll be aiming in there for our take profit. Somewhere here. We'll be aiming in here for our take profit. So you see what market did? Market gave us a beautiful, what is this? 1:5 risk to reward. 1:5 risk to reward. That is just the power and concept of it. And there's another thing that is funny there, because it's not only supply and demand. Like I used to tell people that majority of these strategies are combined. They are exchangeable with each other. Let me show you guys an example. If I was to trade order block and fair value gap with this thing, you see there's a big impulsive move down. There is an order block here. There's an order block here because of this impulsive move. There's an order block here from here to this stop here. So there's an OB, so order block here. There's also a fair value gap right there. The fair value gap there from here to this candle. As you guys can see, if we were to take setup of this particular concept, the order block concept, so fair value gap currently, would have take our sell a week, like a spread size from the order block, because that's how I used to enter my order block. Then tight it at this top here. Yeah. Then we'll be targeting down like this. So let's zoom out. Let's take it back into the main one. You see, take profit hits overall. It's just that you get a better entry. You get the entry right as the move is happening. That is why I like order block and supply and demand. I join them together whenever I'm trading. As you can see, take profit smashed on both occasions, even using the order block and fair value gap method or use supply method. So guys, that's just how I traded and I got a beautiful 1:5 risk to reward on this trade. Hopefully you guys enjoy the video. If there's any questions, leave it in the comments below. I'll read the comments and I'll try to attend to that. If there's anything you want me to explain for you guys should leave it below in the comments. Leave it in the comments. Thank you guys for watching the video. Peace out.